Thank you for joining us this morning. We are Anders CPAs and Advisors based in St. Louis, Missouri, for those of you that have met us before, serving companies and individuals all throughout St. Louis, all throughout Missouri, and actually all throughout the country. Our Startup and Entrepreneurial Services team serves founders, startup company leaders, angel investors, accelerator funds, venture capital funds, and all of the entrepreneurial service support organizations throughout St. Louis and the Midwest. So our team has the startup ecosystem covered from front to back. So with that in mind, please let me introduce myself. My name is Dave Finklang, and I'm a partner with Anders. And on behalf of all of my partners, on behalf of our 450 colleagues, thank you for joining us this morning. Also joining me this morning are two of my esteemed colleagues from our Startup and Entrepreneurial Services practice. I'll introduce you to my colleague Josh Snyder and Kyle Craw. And our entire Startup and Entrepreneurial Services team is behind us in what we are very excited to present and discuss with you this morning. So this morning, our team is here to unpack and explore our recent Startup Ecosystem Survey. As part of the survey, we, on behalf of our firm and with our marketing team's help, published our first annual Startup Ecosystem Funding and Outlook Survey report. It's a report that, with our experience with many parts of the ecosystem, we thought we were uniquely positioned to bring back to light. So 6 or 7 years ago, pre-pandemic, there was a survey by one of the organizations in town, similar to what we tried to accomplish. And as many things unfortunately did during the pandemic, the survey went away. And we, as a firm, just thought here post-pandemic, with many different parts of post-pandemic life impacting startups and the ecosystem, we thought it was a great time to try to bring a survey back to light. So we did our best to compile the right questions, to take the temperature of both companies and investors. And we launched a survey at the end of 2023, and we crossed our fingers, quite frankly, that we would get enough participants in the survey to gather meaningful data to present to everybody through a report and then to discuss today. And thankfully, we did get a remarkable response from both companies and investors. So thank you to all that participated. And the data we got back was, some was definitely surprising, some we somewhat expected, and some was somewhat in between. So very intriguing to get the data back from both parts of the ecosystem, both the companies and investors. So before we jump into the survey, I would like to say thank you again to everybody that participated in the survey. We know it took time out of your day, whether it's running your company or investing in companies, or maybe both. So thank you for all that participated. And then second off, thank you to our remarkable marketing team here at the firm. Josh, Kyle, our CPA and advisor colleagues, we understand and get into these numbers and these statistics all the time, and we talk them and we throw around jargon. But our marketing team is really the brilliance behind this report to distill all these statistics and all these numbers in a very reader-friendly and very user-friendly, meaningful report. Three in particular were heavily involved. Our colleagues Brianna, Teresa, and Krista really helped take the survey results and build this report, and then also help us put together today's webinar and guide us through today. So thank you to the entire team, but especially those three. So I say we jump in. On the first slide, one thing I would like to just briefly touch on is the why behind why we thought now was the time for the report. So why did we take the time? Why did we as a firm invest the resources? Why did we do this? So first and foremost, as I alluded to, post-pandemic, we're a couple years out. All companies and especially startups have just been trying to figure out this new economy, be it rising interest rates, be it staggering inflation, be it a challenging fundraising environment. There's been a lot that, in particular, startups have had to try to kind of wade through, and same thing in the investor community. Kind of tying together all of those things, the economic impact of the post-COVID life, how has that impacted startups? And then third, to kind of tie all that together and really try to be able to discern or better understand um, how our region, the St. Louis region in the Midwest, um, can continue to serve as a hub for startup activity both now and into the future. So with that, we're going to jump right into the discussion. So the three of us, Josh, Kyle, and myself, will be actively engaged in the discussion, of course. But we hope that all of you that have joined us this morning will take part in the discussion as well. So at any part of the morning, if you have a question or questions, please drop it into the Q&A chat. Myself and my colleague Teresa will be keeping an eye on that, and we'll just pull those questions right into the discussion. So please submit as you like. And with that, the first kind of softball question, or the first overarching question to Josh and to Kyle, whichever want to take the lead. What are some ways, or what are some things that a region in general, and then St. Louis in particular, need or can provide to make it a hub or a startup friendly community?
And there are a couple of things that are really necessary for a startup community. You need talent, you need technical workers, you need people with ideas to start a business, and then you need the money to start that business. Those are the two primary ingredients. And then, of course, you need a way to get those two communities together to start those companies. I think St. Louis has both of those in abundance, and it's just a matter of making sure they get together and form those new companies.
Yeah, I totally agree. Josh, anything to add from your perspective?
Yeah, I would say that the Kyle kind of hit it on the head there. That, I mean, really, we have the ingredients that we need to make it, but definitely some things that we can work on, which we'll discuss a little bit further on.
Perfect. Yeah, I think St. Louis over the past decade, really 20 years, but especially over the past decade, has really started to coalesce many of the ingredients needed, which makes St. Louis arguably one of the top 10 to 20 cities in the country, depending on which year and which report you read. So that being said, we have all the ingredients, we have a lot of the things, and they've been building for years. That being said, we're not a perfect city, nor is any city. So one of the survey questions, or one of the tenements of the survey, was, discussing from a founder perspective, what type of challenges they see within the St. Louis and kind of Midwest region. So, Kyle and or Josh, from the survey results and from your perspective, what were some of the kind of key takeaways that you saw?
Yeah. So, I mean, kind of looking at that, I mean, one of the big things that we saw were that workforce and funding were one of the biggest challenges for them. And workforce is one that we, as St. Louis, has been kind of dealing with for a couple of years now. I mean, we have great talent with all the universities and everything that we have in the city, but our problem is being able to retain that talent here. Because right now the kind of the hub of other cities has been attracting that talent away from the city. So we need to do a better job of having a little bit more retention of our talent that's coming out of our local universities.
Yeah, there's one thing I wanted to point out. For a lot of these questions and the answers, we formatted the survey as open-ended answers. And so we read through the answers and then we kind of dropped them into different buckets. So when we say that workforce, it was a top challenge for founders, it doesn't necessarily mean that it was only because they couldn't find a workforce. One of the responses we got was that they couldn't retain remote workforces. So that's an issue for St. Louis as well. I don't know if that's necessarily unique to St. Louis.
Right.
But one of the other things about St. Louis is I think sometimes it might be an industry mismatch. So later on in the report, we're going to see that workforce was one of the things that attracted a lot of startups to St. Louis. And I think it might be due to the industry that the company is in. So if someone's coming in here to do ag tech or biotech, I think they're going to find plenty of workers. If they're an industry outside of that, they might have trouble finding those workers that they need.
Right. And that's a common theme in a lot of different industries, just not in St. Louis as well, too. I mean, that's just something we've been seeing in the post-COVID workforce for years now.
Kyle, your point about remote workforce is very interesting. in that, pre-pandemic, the most companies' adoption of virtual technology, remote technology, wasn't quite there yet. So pre-pandemic, a number of companies that we as a firm work with, and we as three individuals work with, as well as plenty of other companies, a lot of startups were able to use remote work as a key benefit to attract talent that they might not otherwise be able to attract to their organization. They might not be able to pay them what Google could pay them, but they could offer them remote work, and they could live in an RV in Oregon for 1 month and take that RV to Texas the next month. That was a very attractive benefit. So a lot of smaller startup software companies in particular were able to attract key talent with a remote benefit. Well, COVID changed all that because now almost every company provides some level of remote work. So that key competitive difference with remote work and virtual work, we've seen diminish and make it extremely challenging, not just for St. Louis startups, but for startups across the country that use that as a key benefit. So, one other thing that I think came through in the report quite a bit, somewhat unique to St. Louis, but across other cities, related to funding. Kyle, I know you spent a lot of time in the projection world, in the funding world. Could you speak a little bit to some of the feedback we received and kind of what you're seeing in the marketplace related to funding challenges?
Yeah, so I think, Dave, I think you mentioned at the beginning, we launched the survey in 2023. So bear in mind that's when the survey was answered, and a lot of the founders and a lot of investors responded that they weren't investing as much as they would have been with the higher interest rates, some bank failures that we all heard about. And so there was some pullback on available funds at the time. Now, the other thing to keep in mind, though, is that a lot of startups are almost continuously raising money. So funding is always going to be an issue for them because they're always burning through cash. But the economics of 2023 in particular hammered startups pretty hard with higher interest rates and bank failures reducing loans available to them, and other investors finding other safer bets than venture capital at that time.
So that's interesting because you are correct. I mean, a lot of these results were towards the end of 2023 into 2024. Now, interestingly enough, just this morning, literally, I haven't been able to read the full report, but PitchBook, which monitors venture activity, PitchBook had a stat that similarly supports our stat, that I think it's 13% of funds. I think it was specific to venture funds, but 13% of funds across the country. And I think let me rephrase it: 13% of venture capital groups across the country have said that they are not planning to launch a new fund or solicit new investors in 2024 as we sit today. So that's global across the country, but in our microcosm of St. Louis, I think that's playing out.
Right, but that conversely might be an actual good thing for St. Louis. If it's not affecting only St. Louis, we're not suffering as much as the rest of the country. We're all suffering the same, essentially. So it's not a drawback that funds aren't available in St. Louis because they're not available generally in the country.
That's correct. Now, one thing I do think is important to discuss is, let's talk a little more in detail about the funding sources available in St. Louis, because I think that's how a startup company and a founder can really, for lack of a better term, kind of chart their path towards funding. So when we talk about funding sources, Josh, since you work with a lot of the funds that we as a firm work with, what are these top funding sources tell us about the kind of state of St. Louis as a startup hub, and where companies could take it from there?
Yeah, absolutely. So St. Louis, I mean, for the last decade has done an excellent job of really having funding available for the early stage investors. So obviously you can see from the slide here, angel investors, friends and family, and venture capital are really the resources and programs that have been developed and designed to help out companies kind of in that stage of their life cycle. And so we've have abundant programs available in those types of rounds, but what we're really seeing a disconnect in is later stages investing, because we just haven't had that as much here. There's not as much available, and because of that, venture capital is being sucked up a lot more by higher stage companies. So that's really kind of the challenge that we've seen in St. Louis is as you start out and grow, you hit a certain point, and then potentially you'd have to leave or exit the market.
Yeah,
Correct.
it's an interesting dilemma for St. Louis because Josh, you're right that there is a very robust investor community in St. Louis, particularly at the angel investor stage. And then also on this chart, I just want to point out that incubator acceleration grants are on there too, which are again for very early stage companies. Very, very robust, but there is an issue potentially with later stage funding. Now, startups in St. Louis definitely can raise later rounds at much higher dollar valuations. We've seen those. But one thing I think might be playing out is that we see a lot of exits of St. Louis startups to other companies in other cities. I know of two startup companies in St. Louis that have gone public. Every other successful exit that I know about has been to a corporation in another city. Is that due to lack of VC funding here in St. Louis? Is that putting pressure on investors and startup founders to grab that exit when it presents itself to ensure those returns that everybody is expecting? I can't say for certain, but I think it's something to watch and to see if later stage venture capital would be a solution to that.
Cal, you're 100% correct because, just anecdotally, if we think of the companies that we've guided through exits over the past 3 years, which have been quite a few, I can only think of one of that I think only one of that population was an exit to a sale of a larger St. Louis company of a St. Louis startup. It wasn't a St. Louis public company. It was a large St. Louis family-held business that bought a technology company to enhance their technology offering. But otherwise, all of the companies that we've guided through exit have all exited to companies in other cities, which is an interesting data point to think about because on one hand, the investor community likes that because that's an exit for an investment fund or an angel fund or an individual investor, so that's good for their portfolio. But for the city of St. Louis in our region, trying to bolster the startup economy to bolster employment and bolster businesses, it's not a failure per se, but it's definitely not a positive in that they're taking those employees with them generally and the headquarters with them. So it's good generally.
Right. No, you're right.
For the city
Objectively, it's a good thing.
microcosm.
Objectively, it's a good thing. St. Louis is richer for it, but it's not optimal. And it's something that I think might be holding St. Louis back as a region with all those exits.
Correct. And, I guess, thinking about the funding sources we do have, especially earlier stage with Angel and, some seed and Series A, Kyle, what do you think that, St. Louis does well to attract earlier stage investors, be it angels or seed level investors?
Well, I mean, I think at this point, I think all the support organizations, in particular, BioSTL and Cortex on one hand, and then the Danforth on the other, those have created industry clusters that have generated know-how, knowledge, experience, whatever term you want to apply, to both the investors and the startups. So investors are knowledgeable about those industries, and there are plenty of opportunities for them to invest in those industries. I see them every month. I see multiple examples every month of opportunities for those angel investors to invest in companies in those industries. And I think that is really a great thing that St. Louis has done is develop those two industries in particular.
Correct. I agree with you with that. And, compared to other cities, St. Louis is, I will say St. Louis is very fortunate to have a strong angel investing community at large, but then is incredibly fortunate to have the St. Louis Archangels because that's a very well organized, very well run, very well put together group and collective of angel investors that, otherwise a one-off angel investor might not meet the investing requirement or minimum for a company, but St. Louis Archangels does a great job of coalescing a number of interested angels together into these special purpose vehicles, these LLCs, such that 10 angel investors can certainly meet the investment requirement to invest in a fund. So, having organized groups like the St. Louis Archangels in St. Louis, I think is incredibly powerful for our city and for companies to otherwise bring funding that wouldn't be there. Um, you know, Kyle, this is somewhat of a challenging question, just because we don't see other cities as well. But how do you think this compares to other cities that have later stage investors? And why would you think that Silicon Valley or Boston or Chicago would have more late stage money than we do in St. Louis?
Well, that's an interesting question, and one of the things that I think may be the case is that late stage venture capital might be an industry cluster of its own. In Chicago, if you have a bunch of VC firms together, it's more likely that they'll be able to raise funds. The employees there will go back and forth, start their own funds. That might be part of it. We don't really have anything like that here in St. Louis. We do have, we have some VC funds that go through Series A. We have some corporations that will make those investments, but we don't really have a single large VC fund that goes in the Series B, C, D rounds. And yeah, it's a little perplexing on how to develop that specifically, especially considering startups in St. Louis can get those funds from other cities. Why in particular would they need to be based out of St. Louis? I think it would be a good thing for St. Louis, but what is the argument for it in terms of the VC fund? That's a good question that I don't necessarily have an answer to at this point in time. I think it's important to get an answer to it, and I'm going to work on that. But I think it's going to be key for St. Louis going forward is to get those level of funds.
Yeah, Kyle, I agree. And interesting enough, I think the data for St. Louis investors and St. Louis Wealth would support that there's the funding there, there's the wealth there to make later stage investments. I mean, there's a ton of wealth within St. Louis and in the Midwest. Yeah, I think one of the things that I've noticed in talking with a lot of, effectively talking with families and family offices that would have the wealth to make to form their own funds or to make B and C level investments. I think a lot of wealth in St. Louis and the Midwest. This isn't a knock on this at all, but this is just the economic landscape. I think a lot of wealth within St. Louis and the Midwest has been made on more traditional industries. So, pick manufacturing, pick agriculture. We're starting to kind of learn from egg science though, and we're seeing the offshoot of that through the Danforth Center and 39 North. But a lot of wealth in St. Louis is made on more traditional industry, more established industry, a slower but more stable growth industry. So if you've made your money in something very stable and very traditional that you can wrap your hands around, and it's a product you can put your hands on, or it's a beer you can drink, it's a little bit harder to understand technology or science startups or bio startups. So the money's there, I'm convinced. It's just continuing to have St. Louis success stories of exits and high return for the wealth that's there to start to want to move their wealth into the sector. So I think it's there. It's just a matter of getting some of that money to move over to the space.
Yeah.
So,
I mean, yeah, I would say, Dave, you're exactly right there. I mean, high level with that. I mean, St. Louis in general, it's been a conservative area. I mean, it is, well, let's not take a lot of risk. Let's get our kind of steady rate of return on different things. And so you're right. If we can shoot or show more growth and returns coming out of startups and everything in the that nature here, I mean, that's going to go a long way to get more money funding into the ecosystem.
I agree with you 100%. So, we spent a lot of time talking about funding, which is absolutely imperative as we know for entrepreneurs and startup companies. But there's certainly other parts of St. Louis and an ecosystem that will lend support or foster growth for startups. So let's change just slightly and start to focus on some of the other areas within St. Louis that arguably make us one of the top cities, is all the different offerings and support we have for startups. So, first question for either of you, since you're both heavily involved in a lot of different organizations. So what type of resources, what type of organizations, what type of areas does a community need, and does St. Louis have to support startup companies and support their growth?
Well, yeah, we talked about the funding quite a bit, but one direction I know St. Louis wants to go is to develop geospatial as an industry cluster. And so if we're going to go that route, I think we need some kind of organization like Cortex or the Danforth Center for Geospatial that's well funded, and then we need a lot of patience, because Cortex and Danforth didn't develop the industry in a year. I mean, we're 20 years out from the founding of both of those, and we're reaping the rewards now. So we got to get that established, and then we got to wait and keep at it for an extended period of time until that develops on its own.
Yeah, and I was to say, I think something that we've kind of lost in the post-COVID arena is just kind of the opportunities for networking and different events. Both, I mean, we're still starting to see them a little bit more in person. There's still virtual events going on, but I think just having more collaboration in the market again, I think that would help St. Louis quite a bit. That was something when I started my career 10 years ago. I mean, I enjoyed going to different networking events. You could always find an event almost every day to go to if you wanted to. And so just kind of having that collaboration. I mean, it was a small group of people that all knew each other really well. And it went a long way, just kind of having that collaboration and to build off of other people. So I think that's really an area that we need to continue to improve currently, and try to figure out how to best do it in the post-COVID world. I know a lot of industries are trying to do that, but that's something that I could see going a long way.
So that's an interesting point, Josh. And obviously we're focused this morning on the startup community and startup companies, but a lot of the challenges beyond just funding we've experienced within the startup arena aren't necessarily unique to startups. I mean, most companies in the post-COVID era are struggling with a lot of the same types of things that startup companies are struggling with. The big differentiator generally, though, is that a more established, mature company might have slightly deeper pockets or cash reserves to wade through troubled times. They might have access to more traditional capital, be it lines of credit or bank loans. So more mature, later stage companies just have a little bit more staying power during some of the tougher times. But yeah, I think startups, not that it makes it any better, but there's some comfort to know that it's not just a startup problem, whether it relates to labor or inflation or high interest rates. It's across the business community. So we're talking, trying to talk about insights we've gleaned from the survey, as well as just our overall expertise and experience in the area. So I've tried not to pick out specific items in the survey, but this is one that I thought was very important to pick out, and interesting for both of you to comment on. Is one suggestion that came across from multiple investors, said a couple different ways, was that as a region, it'd be nice if we could find a way to effectively coordinate better amongst formal investor groups. So in your eyes, given that feedback has been consistent, how would you see that help the ecosystem?
So I'm not 100% certain that it would. If we had more coordination among investors, is that going to lead to coordination on pricing and investment in startups? Is there going to be, one of these investors might look at a company and decide it's not worth investing in, and that gets disseminated through all the different investors, and so all of a sudden this company now has no opportunities in St. Louis because one individual at one entity decided it was a no. Now there is already a lot of crosstalk between different investors. I've seen it. They definitely talk to each other, refer companies to each other, rely on each other's due diligence at times. So I do think there is quite a bit of communication. Now, whether that needs to be more formalized in, a once a month meeting or something like that, I'm not certain. But I'm not 100% certain that getting more communication between the different investors would necessarily lead to better outcomes for the startups.
And play devil's advocate with you a little bit there, Kyle. So I can see where you're coming from, but at the same time, I mean, just because one company does say no doesn't mean that you can't take the data that company's collected and review and say, well, you know what, I've got a little bit more of a risk tolerance here. I really do think that this could potentially be a good company for me. And then I don't have to do all the due diligence and everything like that. So having that shared collaboration there a little bit, I think could potentially help out investors. I mean, again, it's sharing resources. I mean, they're not all having to do the same due diligence, same work to have the same burden of looking and investing into companies as much. And they can make their own decisions off the information that's there.
Right. And there could be benefits, right? If there is more communication, that means there are more opportunities for more investors to get into a good company, right? And if someone doesn't like it and they pass it on to a bunch of other people, maybe there is one in that group that does want to invest in it. So there definitely could be benefits. I'm just saying there could also potentially be drawbacks.
Right.
Right. There's always trade-offs, right? There's no solutions, just trade-offs is what the saying is, right? So I always want to have my eyes open and see everything for what this could impact, right? I want to know what the impact would be. I think that could be a drawback.
Yeah, potentially. Yeah, that was kind of focusing more on the investor side of things. I mean, even from the startup thing side, on the second part of your question there, Dave, I mean, that potentially, I mean, I still think that could be beneficial to the startups just because it allows them to have more access to potential capital, allows them to have more access to different mentors, different guidance from different organizations, different groups that they may not have had an insight or a network into before. So, I mean, I could see that side of it. Again, like you said, there's definitely drawbacks, but I don't know. I feel like more knowledge and being shared, that it could overall benefit everybody's collective interest in things.
It's a net benefit in your opinion.
Yes.
Yeah.
Well, so yeah, this is an interesting conversation, and I think for for those on the webinar and those that will watch this afterwards, hopefully, this is what's fun about our place in the ecosystem and having many other experts other than the three of us that focus on this area, is that these are the types of conversations that we have about the ecosystem, and we're helping companies. Is we like a little debate back and forth on the pros and cons of different issues, because that's how we're gonna as an ecosystem or individually with a company arrive at the best result for a company, is weighing both sides. So I do agree. There's certainly benefits to having a more coordinated investor ecosystem, maybe smoother handoffs to companies, or from company to company, maybe more pooling of money. But at the same time, it could be, to Kyle's point, and we have seen this, where if one lead investor or one key investor in town says no, everybody else says no, because, well, if that smart person doesn't want to do it, why would I? So there are certainly both sides of that. So kind of keeping an eye on time, but I do want to move, because we could talk more about funding in the various support organizations all day long. Actually, that's a beautiful thing about St. Louis. But one thing I want to shift into are the key industries that we're seeing come out of the report and out of the survey. None terribly surprising, aside from one, I will admit, but just some very powerful data to see where things in St. Louis are definitely stacking up in different industry verticals. So, question for either of you or both, what do you think led to the dominance of these particular industries, especially the strongest ones, healthcare, bio, and ag tech? What do you think led to the dominance of those within the startup community?
I mean, I could take this, Josh Bundo. I could talk about this quite a bit. I mean, healthcare and biotech. I mean, that's Cortex and BioSTL, and that's an outgrowth, if I remember correctly, of WashU Medical School and BJC. So, and again, that started in 1998, I believe. So it's been around for a long time, putting a lot of money into those industries, and it's great to see those results. Like if you tackle a problem and you put a lot of money to it and you take a lot of time, it's going to get results. And the same thing with ag tech. You know, the Danforth Center, and at the time Monsanto, great champion for ag tech. You know, it's not surprising that ag tech is a heavy industry that's being invested to in St. Louis.
Yeah, no, completely agree. I mean, that the universities is just a strong presence that they've got, and then talent coming out of that. I'm completely agree. That's kind of what's driving that, and that's where, again, if we're looking to get into other things like geospatial and things of that nature, it's going to take time. But as we continue to put funding and additional capital into things like that, it'll continue to grow, and it'll be probably a completely different graph here in 5-10 years.
Correct. And this slide kind of ties back into one of my earlier comments that from a funding perspective, we have plenty of wealth in St. Louis to fund B and C in later rounds. And it's what people have made their wealth in that they're comfortable investing in. So I think a lot of money has been made in St. Louis in healthcare, in ag, and in bio, and that clearly shows up on this chart as to why, among other things, the region's very strong for that. So to take it a step further, what do you think the strength of the three strongest industries, but then some of the upstart industries, what do you think that means for the longevity of our ecosystem as a whole? Not just a 10-year project, but a many decade, many generational project.
So healthcare and biotech, I think are great. I think it's going to be great long term for St. Louis. I don't think BJC or Washington Medical School are going to go anywhere. So I think that's solid. It's going to be great for St. Louis. Ag tech, I'm not 100% on. So as I mentioned earlier, Monsanto was a big champion of that, and Monsanto's no longer around. It's bare, and they've made significant cuts to the employee headcount in St. Louis. Is the ag tech sector in St. Louis strong enough to stand on its own without a corporate champion? We'll find out. I did read a report from a venture capital firm in Chicago named M25, and they rank Midwest cities, and they rank one of the things they look at is corporate headquarters, and St. Louis has not been doing great for corporate headquarters. And Monsanto is just one of the latest ones that we've lost, and it happens to be for ag tech. So for me, that's a little bit of a concern is what's going to happen with ag tech. Hopefully it's going to keep growing and grow big, and we'll have new champions and new corporate headquarters, but we'll find out.
Yeah, I agree with you. And I think kind of the last year and all the developments between AI and everything that's coming out in that's going to completely change our sectors and kind of what we're kind of investing in, just because everything that we're doing right now could be significantly changed, just because of the introduction of that kind of software into the market. So I agree. Healthcare is definitely going to probably stay around here, be strong. But I wouldn't be surprised if things still continue to change over the next decade, 2 decades, whatever it is. I have a feeling it's going to significantly change, to be honest.
I agree, and that's what's fun about the evolution of a city and evolution of a business community ecosystem is how it evolves over time. Kyle, the one thing, so I do agree with you with the comment about the number of or kind of unfortunately lack thereof large corporate headquarters in St. Louis from a public sector standpoint. The Bayer buyout of Monsanto certainly wasn't helpful to the startup ecosystem. On the flip side, I think the one thing that will continue to help ag science is that the Danforth family, behind Monsanto, in developing the Danforth Center over the years, I think we have such a powerful force behind ag science with the Danforth Center that even with a little pullback from Bayer, I think ag will certainly shine in St. Louis, but not every industry has a Danforth Center. So it'll be interesting to see as corporate headquarters shift around, and hopefully we don't lose any more. But as things shift around, I'll be curious if another organization can step in a sector.
Right.
So-
And one of the things I'm curious about ACT is I'm wondering how much fungi is going to get involved. Because I know they started to a little bit. They're agricultural adjacent, maybe that's a right term for them. So are they going to get more involved in that or not? We'll find out. And then geospatial, I know St. Louis is a big push on that, but we don't really have a corporate champion. We've got the government, and we've got the government located here, but there's no real corporate champion. So how is that going to develop comparatively? So that'll be interesting to watch as well.
Correct, and geospatial will be an interesting one. I was having a lunch conversation yesterday with some friends in the ecosystem, and we talked a lot about geospatial because I think a lot of folks expected, and that was one of the ones I was surprised on the survey at only 11%. I think a lot of people expected geospatial to kind of pun intended launch very quickly in St. Louis in the startup sector, but it hasn't gone as quickly as folks anticipated, and I think part of that is that while we have the NGA here, which is amazing, and that campus is absolutely just beautiful, and it's going to be even more. It's very hard to get a governmental contract. So it's hard to have a bunch of startup activity around just the government. But what we are talking about, which is interesting, is there's a lot of tangential businesses that support the NGA. So private sector businesses that kind of plug into the NGA. I think those plug-in businesses around the NGA are where there's going to be some possible traction for startup companies over the next few years in St. Louis. So I do want to jump ahead. We could talk about any of these topics all day long, as we often do here. I do want to jump ahead because one of the things that gets talked about a lot in St. Louis, and the survey results showed it, relates to the cost of living and the quality of life in St. Louis compared to other large metropolitan cities. So, question for both of you, how does St. Louis compare to other lower cost of living cities? Kind of a broad question and intentionally, so kind of take that as you will in terms of how we compare to just other low cost cities in the Midwest and across the country.
Yeah, so I mean that's one of the people tout that as a great benefit of St. Louis, the low cost of living. And it is for now, but if we are successful and St. Louis starts growing, the low cost of living is going to go away because low cost of living is negatively correlated with high growth. We want high growth, which means low cost of living is going to go away. And so like comparable cities for us right now are going to be places like Cleveland and Pittsburgh, not Nashville and Austin. Nashville and Austin are high cost of living cities because they're growing rapidly. So when we look at comparable cities, we need to look at those types of cities, not Nashville, not Austin, not even really Indianapolis. That's growing faster than St. Louis is right now. So those things we need to take into consideration when we tout low cost of living as something to attract a startup. To me, when you say that you're telling them that we're a low growth city. We have low cost of living, which means we're a low growth city. Yes, your startup will last longer here on the funds that you raise, but there are going to be other negatives associated with that low growth rate for the city. So yeah, so I see that touted all the time, and maybe this is my pessimistic side coming out of me again, but I don't see it as something we really want to hang our hats on. To me, it's not a good thing to have a low cost of living city.
Yeah, that's oh, sorry. Go ahead, Josh.
Yeah, I would agree with you, Kyle. I mean, definitely, I wouldn't have that as your main attractor. I mean, because it's definitely going to help you and the fact that you can take your money a little bit further. But you're right. I mean, as soon as business starts to grow and expand, that whole thing will be gone. I mean, your cost of everything will go up. And to be honest with you, it kind of gets back into our talent discussion that we talked about earlier of how we were taking all this talent from these universities and we're not keeping them here in St. Louis. Well, it's just because of the low cost of everything. It's good while you're a student, but once you graduate, you can go to a different city and get paid a lot more and do a lot more and have a lot more opportunity. So there's definitely ups and downs with that as well.
Sure. So we kind of embedded in some of your discussion, maybe to spin it, what are some other ways a low cost of living city, especially in St. Louis, can have an impact on the startup ecosystem from, potentially more of a positive light? So what are some of the things that, yes, there are some potential negative connotations with it, but what are some positives that could come along with it?
Well, yeah, I mean, your burn rate's going to be lower in St. Louis. One of the other things I've seen is that you might be able to raise more funds for a lower percentage of your equity. So as compared to like the coast, right? So instead of selling 20% of your company for $1 million, you sell 10% for $1 million. You'll get those kinds of rates in St. Louis compared to the coast. So those could be benefits. I'm not saying there's not a benefit to being low cost. To me, it's just not something that's permanent. If you are successful, it's not a permanent benefit.
Correct.
And
yeah, I think it's a matter of just finding the balance of using it to attract companies and attract talent to St. Louis. But hopefully, for a number of reasons, we want to retain lower costs than maybe Austin or Nashville, but to be competitive, but to retain where we're at, yes, I mean it's certainly an uphill climb to attract companies here when lower cost sometimes does imply lower growth. So I definitely agree with you on that. But use it to get people here, and hopefully a lot of people at once to grow a lot of companies and maybe scale the cost of living slightly. So one thing that got touched on earlier, and actually, Josh, you touched on it a little bit with the low cost of living. It attracts students to come to St. Louis because it's lower cost to be in St. Louis as a student, but a lot of them leave. So as it relates to the local universities, it was one of the things that got talked about as a strength for St. Louis, but I was very surprised that it was as low as it is at only 6%, because we have such a strong university system. So in either of your opinions, how can St. Louis improve the university student pipeline, in particular the pipeline from university to St. Louis companies? So, how do we keep them in St. Louis?
yeah, I mean, just a couple thoughts that I had on that. I mean, we're already starting to do some of these things or have done some, but just having more partnerships with the universities for different industries. I mean, just have whether it's like student-led venture groups or different accelerator programs going through the school. I mean, giving them kind of support, whether it's legal, business, accounting support, giving them additional things throughout college. And I mean, I think another thing is to work to build engagement with their alumni more. I mean, because even the alumni in the area may have moved, but they still, for the most part, a lot of people are still very St. Louis based, and they love St. Louis for many factors. And I think if they engage their alumni more and show some success stories of what they've done in the community, that I think that would be a huge benefit to it.
Yeah, I think SLU was successful with luring Chaffetz back and having that kind of startup competition in their name where they award money. So yeah, that would be a very interesting avenue to pursue for WashU and SLU, to try and get more alumni come back and get more involved in supporting students as they try and spin companies out. One thing I'm kind of curious to get you guys' opinion on is local universities, the two big ones. I know WashU and SLU are med oriented, biotech oriented, not so much engineering technically oriented. Do we need a university that is that way, and could Rankin potentially fulfill that need, or Rolla fulfill that need?
So I think yes to both those universities, and I think what's been very interesting and very, quite frankly, kind of cool to see is Rankin has started some different programs, surrounding entrepreneurship. We in fact have a client of the firm that resides on the Rankin campus as part of their program. So I think what I think other universities are starting to do in St. Louis, because of course everybody thinks of SLU and everybody thinks of WashU in terms of their entrepreneurship programs, but most of the other universities in St. Louis, big and small, have some level of an entrepreneurship center now, some level of an entrepreneurship program, some level of their own ecosystem. So to tie back to you, Josh, I think that's key to keeping students in St. Louis is engaging them in the St. Louis ecosystem while they're in college,
Yeah.
such that when they graduate, it's just a natural transition to slide right into maybe it's starting their own company in St. Louis, or maybe it's sliding into a startup company based in St. Louis. So I think the connectivity for students during their time at college with the city is one of the biggest things we can do, on top of just having, potentially some more opportunities for them to go work. With only a few minutes left to go, I do want to move to the startup ecosystem again. So we talked a bit earlier about some of the kind of verticals or some of the different things in the startup ecosystem that we have in St. Louis. It gets talked about a lot, and it's probably a no-brainer question, but what would you say are some of the benefits of having this reputation of such a big hub and such strong ecosystem for developing startups?
Yeah,
Yeah, I mean,
it's
yeah, go ahead.
interesting to see companies moving here specifically for that, and it's great. I mean, it just shows the success of the two industry clusters that we have here. We've mentioned before, both on the investor side and on the startup side, there's deep industry knowledge and know-how to get those companies going, and companies want to come here to tap into that. One thing I did want to mention that's kind of curious is I sit in on a lot of angel investor meetings with companies presenting to them. One thing I have noticed recently is that companies outside of St. Louis are presenting to angel investors in St. Louis in biotech and healthcare industries, and they have no intention of moving to St. Louis. They just know that angel investors in St. Louis invest in those industries, and so they come here specifically to attract their dollars and then to stay in whatever city they're in. Now, is that a good thing or a bad thing? I'm not 100% certain. I think there are benefits and drawbacks to it, like most things. I'm not sure which one wins out in this case, but
Sure, I understand that completely, and that's the tough thing. It's like we can there's things that will attract them to St. Louis, but hard to retain in St. Louis, but then also vice versa.
Mm-hmm.
So, Josh, any thoughts, from your perspective on that?
Yeah, I mean, I just think the overall ecosystem in the past is really built a great network and has really allowed for a lot of collaboration within the startup ecosystem as a whole. I mean, there's definitely room for growth, and obviously, like we talked about earlier, post COVID, it's definitely looked a little bit different. But it overall, the ecosystem has laid a great foundation that we can continue to build off of to help these companies just have a better overall community, better presence in the community, and it's just more opportunities for them.
Great. Well, as we're getting close, I do want to move to the kind of wrap up here. One thing, it seems like we've been, I don't know, talking about some of the areas that need improvement, even though we've got a lot of great in the city. I think the way to end things or kind of wrap up is, one of the questions in the survey was, how has the St. Louis startup economy improved the most? So where have we made some inroads? So 18%, if I recall, of the respondents said, although fundraising is a challenge, there is more available capital in St. Louis. So, Kyle, just for you, since you spent so much time in those pitches, how has access to capital improved within the last 10 years, in your perspective?
oh yeah, it's definitely grown. Yeah, the Archangels they meet, once a month, and see a bunch of pitches. But it's not just that. I mean, Arch Grants I think started in 2011, but I think every year they've increased the number of grants that they give out, and just I think last year or 2 years ago they increased the amount of those grants. I know UMSL just recently started an accelerator, so there's definitely more access than there was 10 years ago. But same refrain. It's like it's all at that early stage. It's not a whole lot at the later stage venture capital.
Correct. And then, Josh, for you, how would you say the additional resources in St. Louis, of recently We have Greater STL is doing a lot, but then T-Rex is a kind of stalwart. CIC has been around for years. How would you say those things impact the quality of startups being established and grown in St. Louis?
Oh, I mean, the organizations are great. I mean, they've significantly impacted them. I mean, given more visibility to the companies in the market, helping them with their infrastructure and access to affordable working office space, co-working spaces, that type of things. I mean, they give them the support to coaching, mentors, legal, accountants, anything of that nature. I mean, there's a lot of access that those organizations have given these startups, and it has definitely helped build their companies over the years.
I couldn't agree more. So last questions, quick of answers you got. Kyle, where can we improve the startup community the most? One thing that you think would be the biggest improvement for us?
Late stage funding.
Simple enough. Josh, what about you? What do you think would improve the startup community the most in St. Louis?
Kyle stole mine.
Yeah.
But really, I think just not only late stage funding, but highlighting the success of the companies that we have had. I mean, we started to do that and having resources like Inno and the St. Louis Business Journal, just kind of promoting more and more of the different areas of that we're having success in.
I agree with both of you. And I think, Josh, your question lends itself to help Kyle's question because, again, as I've said, I believe there's plenty of wealth in St. Louis to fund later stage companies. And it's those success stories, Josh, that will lend to the wealth in St. Louis investing in these different areas. So, as you'll see in the slide deck when we send it around, definitely glean some key takeaways from the survey. Since we're right at time, we'll let you read those in the slide deck when we send it around. But overall, yes, some room for improvement, but definitely we've got a lot going for us in St. Louis in our ecosystem for both the companies and for investors. And with that, again, thank you everybody for joining this morning. Thanks again to everybody that participated in our survey. This presentation, this report wouldn't exist without you. We greatly appreciate it. And if you'd like, join our mailing list because you'll be the first to know about next year's survey and many of the other webinars and content and resources we have for startup companies. So thanks again, everybody. Thanks, Josh and Kyle, for joining me this morning. Thanks, Brianna, Teresa, and Krista for all your hard work. And have a great day, everybody.